This is Israel, this is Iran, and this is India. Even though we are separated by 3,000 kilometers, distance stopped being a measure of impact of any event after World War II. And one of the first indicators in the modern world and history of impact is the stock market. As Iran mounted its attack on Israel, launching hundreds of drones in its retaliatory attack, the Indian markets were getting ready for volatility. As expected, the stock markets took a 1% nosedive. While to be honest, Israel war was one of the many reasons or many factors for that crash. The proposed changes in the India-Mauritius tax treaty, the hotter than expected consumer inflation numbers were other different reasons for the crash. However, let's listen to what the Israel's Defense Force Chief of Staff said yesterday evening.
השיגור הזה של כל כך הרבה טילים, טילי שיוט, כטב"מים לשטח מדינת ישראל יענה בתגובה.
So this war in the Middle Eastern theater will continue to be the source of uncertainty in our markets for some time. Let's dwell into the impact of what this could have on our Indian economy and from our stock market perspective. Hey everyone, my name is Ashish Thomas and welcome to my macro musings. First thing on everyone's mind was the impact on the international imports and exports. 2 points there. India has net positive trade relationship with Israel, which means we export more to them than import. Our imports are more in the diamond, pearls, chemical space, and a very limited $2 billion imports which gets impacted. Second, India also has a net positive trade with Iran. Only $53 million of import, which is again limited. Also due to the US sanctions, India does not import any of the Iranian oil. So this is not bad. Then why did we hear so much hue and cry around oil? The answer is here. The Strait of Hormuz. At its narrowest, the strait passes entirely through the territorial waters of Iran. And this strait is the world's busiest shipping canal and also accounts for 33% of all liquefied natural gas, or LNG as we call it. The world's largest crude oil port, Ras Tanura, the port of Saudi Arabia, is also around this strait. So can Iran actually block the shipping lane? As per the UN conventions, no. However, it did not stop the Iranian army from attacking the Indian-bound Israeli vessel on April 14th. So that's the fear about oil. Any disruption in this region will impact the oil supply. The demand still remains the same, which means the prices will increase, which in turn is dangerous for us. India is a net importer of oil and imports 80% of all their oil needs from outside. With the Russia-Ukraine war, we were able to supply or satisfy our 30% of our needs with relatively cheap Russian oil. However, with the payment problems, with Russia no longer accepting rupees as a mode of payment and the Houthis attack in the Red Sea, India has started relying on Iraq and Saudi Arabia more. Ships carrying the oil from both Iraqi and Saudi Arabian bases pass through the Strait of Hormuz. I hope this now gives you a glimpse of why an escalation with Iran is a problem. Now let's look at some of the industries that have an immediate issue with the increasing oil prices. The first which comes to mind is the oil marketing companies. Any price increase in the price of oil will impact the earnings of the oil companies like Indian Oil, HPCL, BPCL. Given the upcoming elections, they will not be able to pass this extra cost to the customers, which will impact their earnings. However, given the very strong earnings over the last 2 years, these companies can actually cushion any short-term price hikes to up to $90 to $95 per barrel. However, anything more or anything which goes beyond this quarter, then that is when the firms will start anticipating operating losses. Now, given the scale of operations and the high degree of integration which is there between refining and marketing, Indian Oil and Bharat Petroleum are in a much better position to absorb these shocks than HPCL. Now, in one of our future company coverages, I'll cover a little more about this. This, along with the 30,000 crore in capital support as per our budget, will cover for any cash flow losses. Now, the second one is the paints industry. Anytime the crude prices go up, the input cost of paint companies get impacted. Crude oil accounts for nearly 40% of input costs, so any escalation will impact the paint manufacturers. Now think about companies like Asian Paint, Shalimar Paints, Berger Paints, Indigo Paints, which will get impacted. Third is the tire industry. The tire industry uses crude oil derivatives for manufacturing synthetic rubber. Now several tire stocks like MRF, Seat, Apollo Tires, JK Tires and Goodyear as examples will be in focus as the rise in crude prices will impact their input costs and margins. Finally, FMCG. Indirectly, but the rising crude prices directly impacts the cost of logistics, which increases the cost of input materials and the cost of transporting final products. This forces companies to increase prices, but our salaries do not increase with the oil fluctuations. This means it becomes tough for us to buy the same quantity of goods as we did before. This is the entire concept of inflation. And this becomes even more acute in a rural context, and any decrease in rural consumption affects firms like HUL and ITC. Now, this will also impact the railway stocks, which is actually part of the India, Middle East, Europe Economic Corridor, which is an infrastructure project that India is creating to connect with Middle East and Europe via rail and sea network pipelines and cables. Now, the thing is, this too passes through the Strait of Hormuz, which means this again can get impacted. And think about stocks like RVNL, Jupiter Wagons, Aircon, which might be impacted. Hope this has given you a really nice bird's eye view as to why this conflict has really scared the market for the last 2 days and the decline which has continued. Let me end with a happier note. Crude prices actually fell down yesterday in the anticipation that this is finally over, the tensions are going to resolve. But, it's already also started the upswing once again. That's all from my time today. Hope you liked the video. Let me know in the comments if you really want me to focus on any other macro musings or any other topic that you want me to cover, or if anything you liked in this video. Do not forget to like, share, and subscribe. Thank you.